Good evening, everyone. Well, no love for Apple tonight. Investors soured on Apple shares after the market closed, even though the company said it sold millions of iPhones, iPads, and earned more money than analysts were expecting in its latest quarter. Apple shares fell more than 2% in after-hours trading. Here are the results from its fiscal fourth quarter. Apple earned $8.26 a share. That was 30 cents more than expected. Revenues also came in higher than analyst estimates, with total sales of $37.5 billion. One disappointment, guidance on gross margins were lower than expected. Jon Fortt joins us now from Silicon Valley with more on those results from Apple. So, John, seems like there was a disconnect between what Apple reported and how investors analyzed it. What's the takeaway there? And also, how are things looking for the current quarter?
Well, Susie, a little bit of a disconnect. First, the stock down after hours, but still just to about last week's levels. It's been on quite a run. As far as those gross margins go, on the conference call, Apple managed to say, hey, there are a few things here. Some lower-priced iPads, some lower-priced Macs, some headwinds from the yen, and we're giving away more software now. They said all of that, the deferred revenue involved, will have some pressure on gross margins, but still they're guiding, up to 37.5%, which is a pretty good level. So we'll have to see where the stock trades from here. Keep in mind there's a catalyst coming up when we start to see how those new iPads are selling. That could get investors feeling better or worse.
John, I noted on the conference call that the management said that the board was willing to consider virtually anything in terms of capital structure to get the stock price up. I assume that is a veiled reference to Carl Icahn's activism. Have you got any intelligence on that?
Yeah, maybe so. The stock did pop a little bit when Tim Cook said that they'll be talking to investors again the end of this year. Come early 2014, they'll announce if they have any changes to their capital return program. I should also point out the revenue guidance is the most important number in this call. It's about the money, right? The revenues or the capital returns. That's what a lot of investors are reacting to, guys.
Always about the money. Jon Fortt, thanks very much.